everybody, I'm Dan White with Blue Line Futures. I am here to do another weekly recap of this week's moves. It is Friday the 14th and it's around midday. The first mover we're going to start with is equity markets. So equity markets, the S&P was lower by 150 points. It's around 2.5%. We are seeing a bounce there today. The bounce today is really important, and we'd love to see a settlement above yesterday's high. That's at 56.23. If we get a settlement today above that level, that's going to be the first time we settled above the previous day's highs since Feb 19th. So Feb 19th, if you go back and look at a chart, that's the day this downturn really started. Today's bounce was important. We were sitting at support that goes back to September there. And if we can settle above yesterday's highs, that chart's going to start, I wouldn't say to look constructive, but at least look like it's starting to repair itself. NASDAQs, they're looking like they're going to finish down around 3%. Russell was down close to 2%, and the Dow was off 1,400 points, around 3%. Driving the sell-off, it's still just uncertainty, a lack of clarity surrounding tariffs, trade policy. Again, we saw flip-flops in either direction this week. Nobody's too sure what direction trade policy is going to go, and so it becomes very hard, as investors to price in where we see the economy going, where we are pricing individual stocks, indices, and it's also hard for businesses to kind of plan and prepare when you don't know what trade policy is going to be. So until we get some clarity on trade policy, a volatile, choppy trade is likely in the indices. But when you really dive into those markets, a lot of the valuations we're seeing out there are starting to look really attractive. So NVIDIA, I think NVIDIA's rallied like 10% in the past 2 days. If you look back, that came into the week trading at, I think, around 25 times forward. Now, when a company's growing earnings by 90%, and trading at 25 times forward, that's a fairly good deal. So the support in the equity markets we're seeing is not too surprising, and it's something we're really hoping markets can build off of. All right, moving on from that, Treasury futures, interest rates. Treasuries were marginally higher across the curve, not a whole lot of action there. Those have been trending higher, but interest rates may be kind of bottoming out here. So with that, we got inflation data this week, CPI, PPI. The headline prints in those came out weaker than expected. But, when you really dive into those prints, what you'll see is there's a lot of segments and kind of sub-indices that still showed strength. So goods inflation is still trending upwards. The softer prints are largely tied to, I don't want to say one-offs, but anomalous figures. You saw autos had sharp decreases in prices. A lot of that is seasonal, and those figures should not print as cool in the following prints. And the segments that printed hotter are likely going to continue. So the way markets took the CPI and PPI prints that were, weaker, the headline indices, is that they're still pointing towards upward trending inflation. Now, next week, we get the Fed on Wednesday. There's a very, very low probability of a cut. I think it's like 0.8%. You're not really seeing a full cut priced in until June. May, I think the probability of a cut's around 33%. So depending on the Fed rhetoric and what they say, that's largely going to be the mover next week in interest rates. I think that you may see the probabilities for a May cut come in. I think the Fed is likely to voice some concern on the way inflation is trending. And, looking out, markets have a little over 2.5 cuts priced in to end December. And I think to get that, you're going to have to see a more serious economic slowdown. Sorry about that, technical issues. I think to get 2.5 cuts this year with the way inflation's trending, even before all these tariffs go into place, to get 2.5 cuts, we're going to need to see more of an economic slowdown, which we're not hoping for. All right, so that's interest rates. What else do we got? Commodities, our favorite. Corn and soybeans both lower. Looks like corn down 10 in the orders. Soybeans were off 9 cents. Wheat higher, 5 3/4. There was a WASI this week, kind of a non-factor. Not a whole lot going on there. Heading into planting season for the grains, likely to see an uptick in volatility. We have planted acreage data coming out here end of March. That should be a big mover. What else we got? WTI higher by 19 cents for the week. If you're a client subscriber to our research, you've seen how we've tactically been playing that range. There's some support forming lower relative to all the headlines, tariff, trade news. That's held. This week, you got further progress on the Russian-Ukraine war coming to an end, where it's not official, but Putin has been, receptive to talking. Now, does that mean a deal is going to get done? No. Does that mean Russian crude is going to start flowing into export markets immediately? No. But the headline and the sentiment regarding a ceasefire in that war may be fairly bearish. Now, is it priced in? That's kind of what we're trying to figure out. But markets have formed support, and inventory levels and the current fundamentals, all things considered, still look fairly bullish. Now, the forward-looking balance sheet still has a lot of pessimism. The global kind of economic slowdown everybody's priced in is really hitting the Q3, Q4, 2025 parts of that balance sheet. But still, current inventories are running near 5 to 10-year lows, so that market should have some support in the cash and physical markets. Metals, big mover of the week. Gold above 3K yesterday. Been a long time coming, as all the gold bugs out there, I'm sure they're fired up. But gold, where we're sitting right now, trading around that 3,000 level today, but a settlement above that should be supportive. Silver up almost 5% for the week. That's catching up. We're going to pull the chart up here. That's traded above its Feb 14th high. If you look back at that level that day, that's a nasty wick. That's really where the weakness in silver kind of showed itself. That's where a lot of this macro volatility started coming through. So if we get a settlement above that Feb 14th high, that chart, to me, the risk really looks skewed to the upside at that point. So that's looking very constructive. Copper up almost 4% to $4.88. Platinum really strong. That was up almost 5% this week. That chart, we're going to pull that up here. That starts to look really constructive. That is good to see because platinum palladium has been much weaker relative to gold and silver. So let's move on. Data we got this week, CPI, we went through PPI, softer prints, but underlying factors, there's still a lot of kind of inflationary green shoots. My take on it is that inflation is going to continue trending higher. If the tariffs do go into place, that trend may accelerate upwards, right? So that would, if the economy slows down and we get that acceleration in inflation, that's what people are really worried about. That's a stagflationary environment where you have lower to declining growth in the economy and heightened inflation. So that is not a good economic situation to be in, and the Fed is somewhat handcuffed in that situation. That's about it for this week. Exciting week. We're all tired. 70 degrees out. March Madness firing up, so I hope everybody has a great weekend. Next week, we're looking at retail sales and Empire Manufacturing Monday. We have housing starts, building permits, industrial production Tuesday. And then the big mover next week is the Fed Wednesday. So markets are going to cue in on their rhetoric, how they're looking at this economy, how they're gauging forward-looking inflation, and that may create some moves in the interest rates, equities, commodities. So next week should be action-packed. We'll try and keep you updated on everything. If you're subscribed to our research, we'll keep that going and try and keep you on the right side of some of these trades. Thank you guys very much, and have a good weekend.